we had some data come through on the Kenyan front yesterday. CPI having risen to 5.42% year on year in January from 4.51% in December. Overall market reaction to that increase that came through?
Thank you very much, Alishia. That's a good recap of the market. And just as you noted there, we are looking at a consumer price index significantly rising, while central bank perspective is basically looking at how the consumption as well as expenditure has been, especially during the beginning of the year because of a lot of major activities that happen in our region. But looking at it from the point of view of the inflation picture as well as the purchasing power of the economy, it's a major concern for our market. But looking at it from the point of view of the fact that central bank is trying to still boost cash injection as well cash flow and liquidity in the market, it's fairly positive in terms of ability for people to still be able to afford the stocks. But looking at it from the point of view of the market, it's a fairly not so good picture because of the kind of corporate actions that are coming in, especially what you noted there about Mumias. And as we are starting February, it looks like we might continue seeing a bit of a suppressed activity in the market, as well as what you noted there about the political risk.
Well, of course, globally, there's been this focus on inflation, especially in emerging markets, concerned that higher commodity prices are going to be fueling inflation. We've had developed economies joining that fray as well. And the concern is that we're going to see this now see world growth stumble. What kind of risks does this scenario pose for Kenya's growth trajectory?
Well, looking at it from the Kenya's perspective, well, we must admit that from an economic point of view, sometimes some level of inflation is good for an economy so that it can still be able to increase the level of activity as well as capital injection as well as activity in the industry, because it helps especially producers to be able to still foot some of their costs that are still increasing with time. But looking at it from the local perspective, especially just as you noted there, from the global point, it's a very major concern. But look at it from the Kenyan's point of view, we are seeing the central bank be very keen to be able to see whether we can still be able to spur growth as well as economic activity in the industry. And sometimes that balance becomes very, very tricky, and it's almost is a very thin line to be able to walk through. But looking at it from the perspective of what central bank is doing, from what the private sector is trying to do, especially in terms of being able to ensure that goods as well as purchasing power goes at par, it's fairly a tricky balance as at now. But looking at it from the perspective of how much people are looking and anticipating for the year going forward, it's fairly positive, hopefully, and we are hoping that things like the rains are going to almost be able to still stabilize, and some of these producers are still going to be able to manage to reduce their costs so that you can be able to still spur some bit of growth, especially this year that we are hoping to do something slightly above 5%.
Let's take a closer look at central bank action thus far, because investors have been worrying about the unorthodox policy responses that we've seen in the face of rising inflation, with Kenya cutting rates just as a conventional economic textbooks say they should for political reasons. Are you concerned at all about the kind of path they're venturing down at this stage?
Well, looking at it from the central bank's perspective, just as you noted there, yes, it looks like the approach is fairly the conventional approach, which does not seem to work very well in our market, because even when they reduce their rates or they cut their rates, we see commercial banks still having very high lending rates, and because of that, we are not seeing a direct impact of some of the actions that central bank seems to be taking. But looking at it also from a political point of view, it almost is an indicator that they're trying to still boost the economic growth, especially as we are nearing elections, so that it can still continue creating a bit of investor confidence. But hopefully we are trying to encourage, and one of the things that we are so keen about in terms of the central bank is to try to be in touch with the market so that they can be able to come up with more relevant policies that can be able to still boost economic growth as well as try to support the market. Looking at it from the point of view as at now is that their approach is fairly conventional, and hopefully they'll be able to still look at other ways of still being able to spur growth as opposed to some of these very traditional modes that they are still using.
Well, talking about cost pressures that have been exerting on inflation, electricity costs are expected to rise, with water at dams at lows at this stage, and we've got a player like KenGen now turning to the option of thermal power at a time when oil prices are on the rise. Bad for consumers, but for KenGen, though, one would assume good news.
Yes, definitely. Looking at it from KenGen's point of view, well, the Kenyan consumption of electricity has been growing significantly, especially looking at some of the GDP growth that we are recording, as well as the demand that we are seeing in the infrastructural development and all. But looking at it from the point of view of the generation perspective, that has been a major concern, because we've not been able to still take advantage of some of the other modes of generation that we still have. And looking at it from the perspective of having to rely on oil, which has been fairly volatile over the recent past, we are seeing seeing them trying to see that they can diversify into geothermal, which can also be fairly positive for our market. But for KenGen, I think it's still a tricky balance, because we still have too much reliance on HEP, which as at now is a bit of a concern because of that issue of rains, which are not as consistent or stable. But looking at it from KenGen's point of view, it's one of the things that's even affecting the share price, because even despite them having the bond and the restructuring that we saw them working towards, we are still seeing them being unable to still meet the demands of electricity in the country, or even be able to position themselves to take advantage of things like solar as well as wind power. But hopefully, as we go forward, it's still a very good position for KenGen to be able to take advantage of the opportunity and be able to instill investor confidence by coming up with fairly stable and very good energy generation perspectives that are going to be able to still cushion it in terms of some of the things that we are seeing.
Samuel, what about a player like Mumias Share? It's been on the back foot since its results announcement on Friday, really being hammered when we're looking at share price movement. It fell back 3.4% yesterday. It's sitting at 8 shillings 60. Do you see it taking enough advantage of the position it's in to produce ethanol?
Thank you very much. Just a very good observation there about Mumias Sugar. Well, looking at Mumias in particular, we've been seeing this stock being a favorite stock, especially for industrialists as well as foreigners. Just a few weeks back, we were discussing Mumias, and we are seeing that it is very well positioned to take advantage of the sugar need in the country, even to be able to start to diversify, which has been actually on its agenda. But looking at it from the perspective of the results that they just announced, well, it has been taken as a negative result, because people are very, very positive and about it in terms of being able to still at least sustain their profitability. But a reduction has basically taken investors aback, and just as you saw there, we are seeing a bit of a reaction in terms of looking for a new price position because of the stock, and hopefully it will get some bit of a support. But going forward, I think it's a lot of work for Dr. Kidero to be able to still come out with the agenda as well as the strategy for Mumias going forward, especially in terms of the COMESA changes that we are anticipating later on in the year, because that is a major concern, and we are hoping that it should by now have positioned itself to be able to have the cogeneration aspect of it, as well as what they are thinking about bottling water, as well as some of the diversification strategies that they do have. And right now we are seeing them coming to the fore with the corporate actions as well as announcements about investing some bit more in terms of their diversification strategy. But in terms of the bottom line, that's a major concern that they did not perform as well. And now that they still have another half to go, I'm hoping that they'll be able to do something better this second half.